Okay, folks, welcome to Thursday Night Stock Charts Live. Tonight we're going to talk about, is there going to be a good stock market crash? We're also going to talk about our week. How did we do this week? Very, very volatile week. People have been roughed up. We'll talk about our trades and our game plan moving forward. We will talk about a few stocks that I love. NVIDIA, Airbnb. Airbnb came out with outstanding earnings report, bottoming out, looking good, countries opening up. Loving Airbnb. Not yet, though. NVIDIA, great earnings report. We love it. Not yet, though. So we're keeping our cash on the sidelines, looking to take advantage of bargain. Not yet. It's way too early to decide to go bottom picking or bottom picking, bottom feeding. I forget what it is. I think you get my point. Uh, we're going bargain hunting, I guess. That's better. Yeah. I want painkillers right now. It's killing me. Um, we're going to do chart requests. And we're going to go over the weekly charts, folks. How are we poised to close out the week? But remember, one trading day left to go. So Thursday nights, what we like to do is we like to take a look at the Thursday night weekly charts to get a feel. Okay, where are we at? And how are we poised to close out the week? If we continue to weaken, what's our game plan for next week? If we strengthen, how does that adjust our strategy as we proceed into the next week? We're not waiting for Monday morning to decide on our strategy moving forward. We're doing it tonight. And with members on Saturday, we'll be going over the closing price action on the week ahead commentary. And that way we'll have a firm idea of this is where we want to go with the market. So if you're not currently a member, sign up for the 14-day free trial offer. Let's get to comments. Say hello to people. Where are my glasses? Rick Roofing. Good evening, brother. Brother Bear. Yep. Yep. Very much so. Jeff, welcome. Welcome. Bad audio, Ben? Is the audio bad? I don't know what to do about that. I don't know what to do. Let me make sure my mic is set correctly. Come on, full HD audio. Testing, testing. It looks good on this end. Does this help at all? Hopefully. Um, okay. Floating in and out. So, okay, so we have audio issues. Hopefully, I just changed the setting. Hopefully that helps a little bit. Sounds like, yep, like underwater. Let me check the settings again. How about this? Is this better? Unplug microphone. Look at that. You want to be my producer? Hey, Paul. Bottom Fisher. Bottom Dick Catfishing. All right, so good. Are we good now? Look at Jeff. Jeff, the man of the night. Thanks, Jeff. Okay, let's. Okay, so Jason asked the question of the night. Okay, are we crashing or what? The safe answer for me to say is I don't know. But that would be milk toast, and I'm not milk toast. I have firm opinions on which way the market's going, but I will admit when I'm wrong quickly and reverse course. So I'm going to go over the reasons why I do believe that this market has a lot further to go. I'm going to give though a trigger warning. I will be talking about politics. I'm not going to be saying who's right, who's wrong. All I'm asking you to take a look or think about though is, does he have a point? If you're on the left side, if you're on the right side, we don't have to change each other's mind. Just think about what I'm saying and have enough intellectual honesty, which I know if you're here, you probably do, to say, okay, he's got a point. All too often nowadays, you can't even talk about politics because people just blow up at each other. So it matters, folks. It really, really matters to talk about politics a little bit. I'm not going to say who's right or who's wrong. I'm just going to talk about position. Yeah. Smash that like button, talent. Thank you very much. Fed is pulling away support hinges from markets slowly. We're going to talk about that in a moment and why we are at a historical precipice. Follow the Fed. Grass is all down, but not if there's inflation, interest play, money rotating to banks, commodities. It's funny you say that, Westlaw, because I sold the banks today. The game will change after March 15th. I sold the banks today, and I'll tell you why in a moment. It's both technical, to a lesser extent technical, to a greater extent stick around. I'll tell you. Okay, so I'm going to kick things off with the whys. Why we are at a juncture right now where uh, you're beginning to see the narrative around many, many things crumble. And people want to say that the narrative is owned at current by the Democrats, always has been. That's not the truth. In my own opinion, Bush the Jr. went into Iraq and he shouldn't have. He shouldn't have done it. So while I lean Republican, I don't agree with a lot of what the Republicans do. So that's being intellectually honest. So what we watch what they say now. Watch what they do. Yep, that's right. That's right. That's my old adage. So right now we need to appreciate that we have had a managed government since the 1990s, probably even earlier than that, where we went from a capitalistic society. We still have capitalism, but we went from an entrepreneurial, capitalistic, save up your money, start a business. The government will help you with the Small Business Association, to an economy that is not driven by growth and building things, because we outsourced all that. That all went away with NAFTA and over to China. So now where we find ourselves is that we have a credit-based society, a credit-based government, a la the Fed. That's why we're always looking at the Federal Reserve to determine, hey, which way this market's going to go. I don't know. What's the Fed got to say? You didn't really do that back in the 70s and the 80s per se, because we were focused at that point in time on deficits. We were focused on how well are we managing our budget in Congress. That was important then. Nobody talks about the deficit anymore. We have twin deficits. We have a budget deficit and a trade deficit, and they're massive and they're growing. If we would have done this back in the 70s and 80s, this stock market would have been halved a long time ago. But because the Federal Reserve is involved, we have this bubble that is going to come unglued. So how does this play into politics? Let's face it, right here, right now, the Democrats are poised for a wipeout. How do we know? In the midterms. What the heck happened here? Here you go. Real clear average. Disapprove of Joe Biden, 53%. You scroll down here, and I'm building up to a point later on. You scroll over here, Kamala Harris, unfavorable, 51.9. Donald Trump, not much better. Nancy Pelosi, 54.8. Everybody hates that broad. So on and so forth. Schumer, disliked. These rhinos, Kevin McCarthy and Mitch McConnell, they're Republicans. I don't like them. They need to go. They need to get primaried and thrown out of office. So this is not a political discussion per se. I'm just building up to a point of why this market is on very, very shaky grounds. On the 15th, this is to reinforce my statement that the Democrats know they're poised for a wipeout. So how do they avoid it? And how do we know that it's going to be a wipeout? San Francisco voters boot out 3 school board members, and they didn't just lose by a little bit. They were annihilated. Like 75% voted against them. So this is in San Francisco, the bluest of the blue areas of liberalism, and they were wiped out. This is just a microcosm of what's coming in the midterms. Fast forward, the news flow is turning against the Biden administration, the narrative. And don't get me wrong, for those out there that think I'm talking down the Democrats, the jawbone up, the Republicans, I'm not. The Republicans have done absolutely nothing. Some have, not the leadership. The leadership has done nothing to fight back. So the news flow out of the FDA, corrupt as corrupt can be. Basically, it's the who's funding the FDA. Think about all the trillions in debt that we are building up month after month for years. This is the Federal Reserve's balance sheet. Who does the FDA rely upon for their budget? Big Pharma. I never knew this. Big Pharma funds the FDA. The money they give the FDA helps speed up the approval process. And besides the fact, the people that leave the FDA have great careers in the pharma industry. Wink, nod, get my point. So the corruption is surfacing to the top. The narrative, the veneer is being ripped away quickly. The Hillary Clinton spy scandal, she was supposed to come back and become the challenger in 2024 for the presidential election. That's not going to happen. That's done. She's gone. She's lucky if she doesn't get indicted at this point. So the news flow continues to weaken further and further for the Democrats. I'm building up here. Inflation. Using the CPI, the government numbers, we're at 7.5%. In reality, using the real number, we're at 15% inflation. So how do you read into this if you're an investor and you want to put money to work? You want to go bullish? You want to go bearish? Hell, I'm taking the bear camp all day long. Why? The G7. The G7 is a group of countries. You have the G20 and you have the G7. The G7 is Canada, France, Germany, Italy, Japan, the United Kingdom, and the United States. The most wealthiest advanced economies in the world, all supposedly democracies. Canada's Justice Minister supports Trump voters should be worried about having their bank accounts frozen. Canada freezes convoy bank and crypto accounts. Bank run on Canada's top banks mysteriously go offline. Let's talk about the fractional reserve banking system. So, for those not familiar with the fractional reserve banking system, it's basically a house of cards. You've heard of bank runs. The reason why one of the arguments for creating the Federal Reserve in 1913 was to do away with bank runs. Now, if the federal government is able to go in and steal your money, the fractional reserve banking system is under a serious, serious threat, because what the fractional reserve banking system means is that for every dollar, and give me some room here, I don't know the exact number, for every dollar the banks take in as a deposit, they can lend out 10. Think about it. You take in a dollar. You want to know why banks are so powerful and profitable? You give them a dollar, they pay you real negative interest rate, yet they lend out $10 and they get paid ridiculous amounts of money for credit card, interest rate, etc. It's a printing press. It's a license to steal. The however is that you must have confidence in the system. The minute that confidence becomes shaky, it all comes crumbling down. Circa 2007. If they can do this in Canada, a G7 nation, what's preventing them from doing it here? Did you see crypto today? I've been warning about a bear flag setup, and a couple of you have been teasing me about it not rolling over quick enough for you. It rolled over today. Bitcoin is broken. Bitcoin's going down. You could point the finger of blame at Canada. If they could seize crypto, what's the value of crypto? And if somebody could tell me how they got the wallet IDs for those people up in Canada, I would really like to be educated, because I don't have a clue. I don't know anything about the law, so it's kind of concerning. But I'm not surprised. I'm slightly surprised. We have a lot of comments here, man. You guys are on fire. Okay, we already did that one. Yeah, as long as the elections are legitimate. So yeah, I'm going to get to that in a moment. Yeah, I know. He just got reelected. I know, Trader Isaac. I got squeezed out yesterday and missed the reentry today. How would you recommend getting back and spy? Queues haven't broken yet. You didn't miss anything yet. Spies will go over in a minute. You didn't miss anything on the queues. Yeah, you got to be careful. You know, just because you didn't short at the top, or you got squeezed out, don't beat yourself up about it. Um, it's not about being right or wrong. It's about having the discipline to say, okay, you know what, this trade's not working. Moving to the sidelines. I'll re-enter when, and fill in the blank of when is, So don't beat yourself up about it. I'm calling Yogi Bear. Let's get them. Bust the stacks. Hey, brother. Even though stocks got killed today, there was no panic. Yeah, it was just a slow melt away. Yes, I agree with that. We'll go over the volume in a moment. I think both parties are the same. Yeah, it's a uniparty. The only reason why they have parties nowadays is so they can yell at each other, get us divided, have us fighting each other. That way we don't watch what they're doing. That's what it comes down to. But that's coming to an end. The normies are waking up. People are waking up. These people, for Justin Trudeau to do this without consulting Parliament, not that he has to within 7 days consult Parliament, but to trigger this emergency is beyond belief. He's freaking out right now. That's how you know that we are winning. The public is beginning to win, but the problem is what will they do to control their hold on power? The woke left right now is in control of pretty much every institution, and they will not let it go. And they fight for keeps. You can say whatever you want about them. I don't relate to them. I despise them. The however is that I will give them credit. They fight to win. The Republicans, all they do is wake up every single morning and think about, how do I snatch away victory from the jaws of defeat? How do I do that? Or is it vice versa? Either way, Republicans want to lose. I think I screwed that up. Blame it on the painkillers. Interest rates hikes might be priced in already, but the VIX factor is increasing. Still, Russia's a non-issue. I don't believe that. Russia's a non-issue. Lying about pulling out, yet increasing. I have Russia up here. This is a distraction. This is a distraction. This is Blinken. Russia. This is a distraction from this. They don't want you looking at this. They don't want you looking at this, right? These are defeats. The narrative is crumbling. They want you fearful of the next crisis, which is the Ukraine. They don't want you looking domestically now. They want you looking over at the Ukraine. So why do we think that there's a stock market crash? Because the corruption, as I pointed out, is just staggering. Add to that, Goldman, they must have added more to their shorts, because Goldman's startling admission, the economy may be slowing more than expected. Remember a few weeks ago I said Goldman is short. How did I know Goldman was short? They came out and said 4 rate hikes, 4 or 5 in 2022. The next day, Jamie Dimon comes out, 6 or 7. That's how I knew they were net short. The markets have never hit those highs again since they came out and said that. Now, Goldman's coming out saying the economy's slowing quicker. We've been saying that for weeks. How have I been communicating that to you? Simple. All you need to do, I don't need Goldman Sachs. I don't have an account with Goldman Sachs. Why are they giving me free advice? Do me a favor. Keep your advice. It would have been worth something months ago. I've been pointing this out for a while now. The yield curve. This is crashing. This is a sign that we are heading into recession. We don't need Goldman Sachs. We don't need JP Morgan to tell us that we're heading into recession. The yield curve, for those not familiar, has identified, I think, all but one recession since like 1955. Right? It's that accurate. We haven't inverted yet on the yield curve, but we're very, very close. So, why did I sell my banks today? Well, this certainly doesn't help. The ability to go in without due process, without a real emergency, and to steal people's money. If they could do it there, you don't think that the woke are going to be sitting over here in the United States saying, wow, that guy Trudeau's awesome. Can we do that here? If you don't think that those people are sitting around thinking about how they could do that here, think twice. And already Trudeau is out trying to fearmonger. Canada's Justice Minister says Trump supporters should worry about having their bank accounts frozen. Is he talking about Canadians? Is he talking about Americans here? I don't know. I don't know. So the fact that you have desperation really building up now, and you take a look at the fact that the economy is unraveling in a very big way, add to that, stocks remain overvalued. For full disclosure, this is as of February the 10th. It is not updated for current valuations, but I'm sure we're going to remain still overvalued by the end of business tomorrow. So, how do we know that the Federal Reserve is still very, very worried? Well, you take a look at what there are a lot of comments here tonight. Uh, Here, Donnie put this up earlier. This is what I always say: watch what they do, not what they say. Okay, watch what they do, not what they say. So the markets have been dropping on fears of a interest rate hike, which they're gonna come. They're gonna come. I don't think they're going to be as big as expected because they can't. They can't do it. How do we know that the Federal Reserve is not serious about raising rates? Well, here's the balance sheet. This is as of yesterday. It hit a new all-time high. They're still throwing gasoline on the inflation fire. They're making it worse. They're making it worse. They're supposed to stop buying next month. So this should, if they stop buying, flatline. But when they do, we need to keep in mind that this chart correlates pretty much tick for tick with the S&P 500. So if this was the proximate cause for the S&P 500 to go up with earnings slowing, the economy taking a nosedive, why is it not, meaning the S&P 500, going to go down once this flatlines? Remember, this is a credit-based economy. It relies upon air getting pumped into balloons. Stop that air, you stop that stock market. How do we know that people are getting afraid? Very, very afraid. Afraid of the banking system, afraid of what they're seeing in the inflation front, afraid now that Bitcoin is not safe from the federal government. How do we know that? It's what I've been talking about for a couple of years now. You got to be in gold, folks. You got to be in gold. Gold is up on the month nearly 6%. S&P 500 is down over 2.75%. This is a chart that is rolling over and vastly overvalued and extended. This is a chart, back to gold, of a commodity which has had a beautiful run up. And for the month, despite all the chatter about interest rate hikes, and I've been saying this, don't worry about it. They can raise rates 5, 6 times, quarter point rate hikes each time. Interest rates are still going to be negative. If you don't bring the Fed funds rate above inflation, you don't kill inflation. So as long as they allow inflation to run hot and they don't fight that inflation with aggressively rising interest rates, unless we have an economy that just goes haywire and breaks down, and we see disinflation or we see deflation, I don't know how you stop it. You know, Kathy Woods is always talking about she's expecting deflation because of all the technology that's coming out that is going to make people more productive. Maybe she's right, but it's not now. It's not this year, probably not next year. It might not be for the next 5 years. So, and we're short of Kathy Woods' funds now. I didn't mention that. So I didn't go over this week how we did this week. Advanced auto parts. I forget what our profit was. I'll say 70%. That's at the low end. These were options trades. We sold the options. We did not buy the options. NVIDIA, we're poised to close out 100% profit, actually more of 100%, if you could believe that, because we rolled down a strike. Airbnb, 80% profit. Shopify, 50% profit. DWAC, we closed out for a profit today. I don't know what the percentage gain is on that one, but it's pretty big. We are short the semis. We are short of the ARK funds. We're watching PayPal, watching NVIDIA, Airbnb. PayPal is the only stock that we're long of that we're doing a little bit of battle with, but we're building a position there. I think we're going to rally. By this time next week, we should have a rally. So, folks, it's all about confidence. It's all about confidence, and confidence is waning. And you got to worry about what these people here are going to do to try to maintain power. Will they take the route of a Justin Trudeau? And you may be saying, the courts will have our back. Maybe. They backed individuals that work for companies with greater than 100 employees from having to get mandatory vaccinations, but they didn't back healthcare workers from not having to get vaccinations. So I don't have all that much faith in the federal government and in the Supreme Court. So you don't know. At least, Biden and the woke people out there, they'll take the chance. If they get kicked out in court, all right, no big deal. They want control. This is all about power. Have no doubt about it. And they will do anything to maintain that power. And it ain't looking good right now. So they're going to have to go full steam potato, as our buddies over at the Salty Army would say. Yeah, David, ARK is filled with growth stock. Growth is not where you want to be at all. That's why we're short of it. I warned about this. You can go back a few weeks ago. Bob, waking up indeed. My father, who has been a card-carrying liberal his whole life, went to the truckers' convoy, is now sending me videos about Klaus Schwab. That's awesome. Yeah, people are starting to talk about the World Economic Forum and Klaus Schwab quite a bit. That's good to see. People are waking up. That's good stuff. Russia will never occupy Ukraine. I don't think they want to. They just want they don't want them in NATO. It's simple as that. The great reset infamy, no doubt. Hello, Klaus. Viva Fry, love Robert Barnes. Ran into the Salty Army in Ottawa last week. Really? Awesome. Very good to see. They don't do that to avoid stock market crash. The Fed will tighten in a managed way. Yeah, the problem is that you got to go back to this chart, right? I'm not saying that all stocks are going to crash, okay? What I'm saying is that your growth stocks, your high multiple stocks are getting knocked for a loop. Look at NVIDIA. Perfect case in point. NVIDIA is arguably, I would argue the best, but arguably the best semi-play out there. They came out with blockbuster earnings last night. We traded it. We did very, very well. And they got hammered today. Why? It's because they have a big multiple. They got knocked down. And I'm looking at this. We bounced off of a support level. Oh, by the way, shout out to our sponsor, TrendSpider, 35% discount code below. Automated trend lines. I just picked off NVIDIA having a support level here. Does it hold? We'll be watching this. Here, those are your automated trend lines. Click of a button. Bam. Tightening triangle formation here. I'm loving NVIDIA. Hopefully, it doesn't break support. All right, our alert's set there. I'll get notified. I think it's going lower. Unless we rally back strong tomorrow, I think NVIDIA is going lower, unfortunately. All right, let's go back to comments. Bob, the Supreme Court did say that healthcare workers can get religious and medical exemptions. Yeah, but I think now you can count on your hand how many are honoring those religious exemptions. So you have a new round of court cases working their way through the system, going up to the Supreme Court. Good point, though. Thank you. Yeah, if I ever say anything that needs a little bit of um, refining, please let me know. I'm not here to push an agenda. Uh, if we have real negative rates, won't more money go into the market? Uh, it depends from whom. You're not going to get it from the individual investor. You're what we need here is an event. We need a stock market crash. Here's what the Federal Reserve needs to do. Okay, in their minds, what they need to do. The stock market is overvalued. We know that. We know that when they stop buying bonds, the market's going to probably stop going up. When they raise rates, it'll be seen initially as a sign of confidence that the economy can take it. The problem is that the yield curve is screaming, we're going into recession. So this will be the first time in recorded history that the Federal Reserve is beginning an interest rate cycle with 7.5% 7.5% inflation as measured by the CPI, and in reality, 15%. The first time they're raising interest rates, a new cycle, as we go into a recession. It's unheard of. So you don't have the economy working. You don't have the Fed at your back anymore. What's the market to do? Multiple contraction. So at some point in time, we'll hit an inflection point. The banks will get cheap enough. Money will rotate into them first. Safe, high yielding. Of course, we got to get past this nonsense of governments freezing up bank accounts. This is scary stuff. This is bad, bad stuff. One of the reasons why I sold my bank stocks today. Did I finish my thought? I think I did. Let me go back to that question, make sure I answered it properly. Oh, so what the Federal Reserve needs to do is they need to deflate assets, housing, stock market, bond market. They need to get a couple of rate hikes under their belt. They need for an event, a stock market correction, a hard stock market correction to occur. Then if they build up enough credits, we'll call them credits, whether they do quarter point hikes, half point hikes, that way they can come back in and then begin to cut rates. What do they do? They can't cut rates right now. So to be able to cut rates, they have to raise rates first, and then they'll cut them. That's what's going to send the stock market up higher. And I think that they'll probably, when they begin to cut rates, they're going to start buying bonds again. And then you're going to see the stock market go like this. Bought SPY 2024 leaps. Buy when others are fearful. Okay, it takes two to make a market. I think it's a bit early, but I respect your opinion. Thanks for putting it out there. Taco, problem with talking politics is both sides are wrong. That's good. I like that. Very good. GLBE up 17%, pumping big volume, strong after hours. Earnings, Rick? Global Bear E Online Limited. Okay, I'm not getting that one. You're good with that stuff, but I don't get that one. I'm slow. I know I'm on painkillers. All right. Let's go to the weekly charts. How are we poised to close out the week with one trading day left to go? I do have a couple of bullish observations to share with you, despite that I'm bearish. So let's get to it. Oh, may I ask you to please pause, take a breath, click the like button, follow. It helps me out with the YouTube algorithm. Oh, and if you're not subscribed to the channel, what I started doing this week, it probably irritates some people, but I do premium content with members, and I wait a week and now I'm releasing the week priors. And you may be saying, what good is that to me? What good it is that if you don't think 14 days to get a feel for what I do is accurate or enough, well, look at my past premium content, see if it worked out right. And you're going to be able to say, okay, this guy knows what he's talking about, or he doesn't know what he's talking about, and you don't even need to sign up. So take a look at my old videos to see whether or not I was accurate. And I'm very confident that it'll help spur growth. So you need to be subscribed, though, to get alerted. I don't send it out to our email list because I don't want them to think I'm spamming them. So it just gets sent out on YouTube. Let's get to the weekly charts. Okay, I'm going to begin with a bullish chart. Believe it or not. And this is bullish for growth stocks. Yields for the second consecutive week are selling off on the back half of the week. Remember this time last week, we were trading above this breakout point. But by Friday, this is why I always say one trading day left to go. A lot can happen here. By Friday, we had closed down below support. So no breakout, was rejected. This week, we rallied yet again. No new weekly high. And we have been pushed down below support yet again. One trading day left to go. It could come back tomorrow. So this is a bullish observation because remember, growth stocks don't like rising interest rates. Ultimate oscillator putting in lower highs and lower lows. Interesting. That's a bearish divergence. The RSI looking good, Stokes looking good. So yields iffy. The TLT. I'll tell you, I think that we may be probing a short-term bottom here on bonds. And I got to update this because we are flirting with a breakdown on a Head and Shoulders neckline. And for those of you out there that are new to trading and saying, why does this guy keep talking about bonds so much? If you're new to trading and you think that you're going to be successful in this business by ignoring the bond market, you're sadly mistaken. It ain't going to happen. If you're going to be in this business for any length of time, you will learn to take a look at what the bond market is doing and know what sectors do well when interest rates rise and fall. That'll keep you safe. So TLT looking good here. I think we were up today. Yeah. 2 days in a row. Money flow. Good volume on the TLT. The tips. Tips may be putting in a double bottom setup. No new weekly low here. These are Treasury inflation protected securities. Why have they gone down despite the fact that yields are going up? Simple. Certain people out there believe that the Federal Reserve is going to crush inflation. By doing what? Buying bonds? I don't think so. And keeping negative interest rates for the next year or two? No, that ain't going to happen. So the tips are up. I think people are waking up and they're saying, okay, this is getting bad. It's getting worse. I'm going to put money into the tips now. The U.S. dollar. The U.S. dollar is looking very, very sick. We had this big run up the week of the 24th of January, a reversal bar the final week of the first week. The fuck is this? Yeah, it was the last week of January. And we had a reversal last week. This week, no follow through. There's a lot of indecision here. And we may be setting up a head and shoulders setup. Left shoulder, head, right shoulder forming. We have broken back down below this breakout point from last week at current. One trading day left to go. Maybe we'll rally back. We have open minds here. Daily chart. We closed up today or flat. We closed up, but we closed off the highs of the day. So you saw selling into strength. The stochastics, which are a momentum indicator, are rolling over yet again, not bullish for the dollar. but the dollar is very volatile, so we got to give it a little bit of room. The VIX weekly chart, we were down earlier in the week. We are now up on the week by nearly 2.75%. Daily chart, we look like we want to go higher here. So that is bearish for the market. The Dow transports. Now, the Dow transports, I always like to say, as go the transports, so goes the rest of the market. The transports peaked out back here November the 1st. A month later, the Tues topped out. So the transports are seeing rallies and then rejections at support levels or resistance levels now. This week, a lower high, and we are being rejected at the 15,000 mark. Look at how close we are to that price point. If we fail to close above 15,000 on the Dow transports, we probably go lower next week. Daily chart, brutal week, brutal day, I should say. A horrible week for the transports, but as somebody said earlier, it was a quiet day today for the most part. It was just a steady round of selling today. Volume was not high. Volume was very low, in fact. But the indicators are weak. Your RSI is weak. Stokes, lower highs, lower lows, rolling over. Everything is just a basket case here. The only positive thing I could say about the Dow transports is that volume was low, and that's not wonderful. The Dow Jones Industrial Average, again, weekly view. We are down 1.23% with gold up, silver up. These are where you got to be, folks. Avoid growth. Right now, you got to avoid pretty much anything. And that doesn't mean, we've had a nice run up in the gold stocks this week. But you got to know where your resistance levels are. NUGT, of which we are long of, hit resistance today. Our alert fired off on our TrendSpider app. We booked some profits, made them real. So we're probably going to get a little bit of a retrace here on NUGT, and that's a good thing. We'll be back buying more on any pullback. Back to the indexes, Dow Jones. A bearish reversal bar so far in the week. These Stokes are ominous, folks. When you have Stokes which are declining, I always say this, but for new folks watching, when you have stochastics which are declining, and especially trading down below 50, the neutral level, rallies tend to fade. What happened this week? In fact, what happened for the past 3 weeks? We rallied, failed, rallied, failed, rallied. Probably going to fail. One trading day left to go. You never know. S&P 500 daily chart. Bearish reversal bar. Same thing with the Stokes. Weak. Let's go to the daily. How's volume this week? Volume's going to come in about average. Daily chart. That's not a daily chart. So, this game is all about, a lot of people think that looking at charts is about, it's like a crystal ball. Like you're going to forecast which way a stock is going to go. That is an inaccurate interpretation of what technical analysis is. All we're doing here is that we're using historical data and we're applying it to current data. So we're also looking at momentum, money flows. How is money flowing in or out? And what you arrive at is a probability. And when you arrive at a probability, you increase your chances of profits because you're trading probabilities and not hope. Now, I'm going to take my crayon out here and I'm going to do a little bit of line drawing. So I could sit here all day long and say, I think the market's going to go down. That doesn't make me right because I'm pretty good at looking at charts. What I will say to you is this, is that a counter argument could be made that we may rally tomorrow. Why? It's because we're trading at the lower band of support on a daily time frame. So we did it here, came close here, here, and we rallied. So with technical analysis, it's not about me talking myself into this chart is going to go down, this stock is going to go down, it's going to break support. I'm not going to short based upon that. I'm going to short more. We're already short, not of the S&P 500 though. I'm going to short more when we get a break and a close below this mark, when our thesis is validated. We're not going to short more before that. That's technical analysis. And what this chart is telling us is that it wants to go lower. How do we know? Well, first off, we don't use daily charts for our macro thesis. We know because our momentum indicators are telling us we're losing momentum. We have been for a long, long time. The RSI has been sending signals about a market peak back here, where we put in new all-time highs, yet it wasn't being confirmed by RSI. RSI was going this way when the S&P 500 was going this way. Your stochastics, another momentum indicator, lower highs and lower lows. MACD went negative today. So the weekly chart is bearish, daily chart is bearish. They're both validating each other. In all probability, I think that we break fairly soon on this market. And we have plenty of catalysts to send the market down lower. If you're just joining in, I went over those catalysts at the beginning of the video, so check them out. The IWM, small caps. Okay, so the small caps have had a nice rally back. This is the IWM. They rallied off of 188.09. I'm looking to short the small caps. Why? It's because I believe that the small caps are in a bear flag setup and that this is going to get resolved to the downside. Why am I not shorting right now? The same argument or the same illustration that I showed you here on the S&P 500 holds true here. I need to have a validation that my thesis is accurate. We need to see a breakdown below this support level. But I think it's going to come because my momentum indicators are telling me that we are probably going to roll over. Price is telling me we're being rejected up at resistance. How do you interpret that? You have more sellers than buyers. Every time you get bid up on the IWM, the small caps, you have 2 sellers for every 1 buyer. That's not good. Daily chart. So we broke out on the IWM. Nice rally. Now we're rolling over. We're giving up support levels. Lower highs, lower lows. Not where you want to be. The trip cues, they're in trouble. They haven't broken yet. Somebody was asking earlier about the cues and whether they were short. No, not necessarily, not yet, because you want to stay consistent with your strategy of not shorting, especially shorting. It's bad when you buy on hope. It's 10 times worse if you short on hope because the odds are against you. So we'll be waiting for a breakdown below support. We're right there right now. Daily chart. RSI, lower highs, lower lows. I mean, it's a basket case. But again, just like you saw on the S&P 500, we're right at a support level. And volume today, while it rose versus yesterday, was still very, very light. We can't ignore it. If we do, it may be to our own detriment. So while I'm bearish on the market, I am not overly confident that my thesis is correct yet. If we break down below support levels, that's our green light. The banks we already went over. We're running long here. Let's go to chart requests. I already have a few. I got to stop at 7 o'clock tonight, folks. So if I don't get to your symbol, forgive me, please. Okay. Again, we're going to be using our friends over at TrendSpider, folks. Please take advantage of their 35% discount code, automated technical analysis. Use the link below. And let's begin with, we already did NVIDIA. That's one under our belt. PayPal. We're looking to build a position in PayPal. We already have a long position, but we're going to get a lot bigger fairly soon because they're killing PayPal. So we're at the phase right now where PayPal is flatlined on Stokes. Let me bring up the RSI. And when I say flatline on Stokes, they can't go down any further. They're literally flatlined. RSI. RSI on a weekly time frame, folks, is at 14. 14.79. That's ridiculously oversold. So why didn't I go running in today when it was down on the day to buy the dip? Because we're not at support yet. Remember that if we're successful in this business because we wait for, if we want to buy a stock, we wait for historical support to get hit. We don't buy in the middle of a trading range. That's stinking thinking. You have institutions that could sell and wipe you out. Where you want to buy is where you have buyers of like mind that are aware of where support levels are. That way you could trade like an institution. It's like, think about it as a crowdfunding. So everybody donates a little bit, like for the truckers, God bless those truckers. But it turns out to be a big pool of money, right? So if you wait for historical support levels to get hit, it's like crowdfunding. You have a bunch of people with a lot of buying power waiting to buy. So let's talk about PayPal and where I think it's going to bottom. I thought initially 110 was support. I said if it breaks 110 to members, we're going to 107. If 107 breaks, we're going to 105. If 105 breaks, we're going to between 100 and 102. We're very, very close to getting very, very long of PayPal right here in this neighborhood. I'll round it up, 103 to $100 per share. We may overshoot, but what we're looking for is a bullish key reversal bar. We want a validation that I'm right, that we're at solid support level. I probably am, but it'll get validated when we see a rush of buying into PayPal. Ideally, we get heavy selling tomorrow morning. Then by the end of the day, we get a bullish reversal bar. Then we know the bottom is in. We're aggressive buyers at that price point. Please, if you're considering becoming a member at any point in time, I'm making my commentary, the prior commentary, free. So go check it out on my video list. It says video, Premium Unlocked. Check out those videos. If you think I'm accurate, then you could join up. Watch a few of them. If you don't think I'm accurate, then thank you for watching. That's all. Cool. All right, so PayPal, very, very bullish on, but not yet. Once it hits our support level. Daily chart of PayPal RSI it's got a 20 handle on it. Very low 20s. We want to see a washout here. We closed right near the lows of the day. So the probability is that we're going to get a continuation move lower on PayPal. My only concern with PayPal, maybe overshooting that $100 per share mark, is if the rest of the market rolls over. Then it could become a bloodbath and it may overshoot dramatically. So I would be a lot more confident if the overall market wasn't on such weak footing right now. So that's PayPal. Very bullish. Soon will be aggressively long. Airbnb. We did an earnings trade on Airbnb, 80% profit on that trade. So they came out with great numbers. Great numbers. You take a look at a monthly chart of Airbnb. This is a monster W formation that is building. Folks, people are done with COVID. They don't care about the new variant this, mask that, jab me this. People are done. And Airbnb is the beneficiary of that doneness because their numbers were outstanding. They were phenomenal and they had pricing power. There's nothing better than being in an inflationary environment and having pricing power. The last company you want to be in is a company in an inflationary environment where their input costs are rising and they don't have pricing power. So Airbnb, looking the bomb. I'm looking for the 179 mark to get retested. And the only reason why I think that it may is because the market's so weak. That's all. 179, you can see I already have my alert set. Right down here, we'll put on a long trade on Airbnb, assuming that the overall market is not in free fall, right? We always got to pay attention to the overall market. If the overall market's dropping, I'm not going to hope that Airbnb, because of their numbers that were so great, is going to hold up and wither that storm, which is a stock market sell-off. It ain't going to happen. Everything's going to drop in a stock market sell-off, especially if we crash. So Airbnb, very, very bullish on longer term, but not quite yet. We were down half percentage point today. Not bad. On light volume. Look at this volume. Light volume. Airbnb, loving it. All right, let's see who else we got here. Let's go through some comments. I don't have much. 7:02 already. I got to log off. Eric, what if bonds are being bought as a flight to safety? There could be. They could be, but that's the reason why the yield curve is inverting. People are going, they'll go to bonds, but they won't go to the 30-year bond, which obviously pays a higher yield or should pay a higher yield than a 2-year bond. People don't want to lock their money up for 30 years at a negative real rate. They'll lock it up for a 1 or 2-year period at a negative real rate because it's a limited amount of time. That's why you're seeing an inversion of the yield curve. So it's entirely possible, Eric. Does Trader Isaac, does DWAC still have a shot at taking out 9150 after today's fade? Yeah, it does, because DWAC, what it did is it rallied off the lows. We were down at one point in time on the day, and we managed to see a late day surge in buying, and we closed back positive. The problem for DWAC is to get to your 9150, we have to first close above, what was the high of the day? $90 a share. A little bit less, but let's round it to $90 a share. If we close above 90, we're probably going to 100. I may sell puts, which is a bullish trade. You hear puts, you think it's bearish. When I sell the puts, we're being the casino, not the gambler. I may sell puts against DWAC. Short term, though. I'm worried about when we get the final launch on True Social that it sells off. You expect a short term on what symbol, Westlaw? As Facebook plummets, DWAC gains strength. Delete Facebook, buy DWAC. Yep. SPY and DIA didn't break the 50-day moving average. unlike IWM and the triple Qs. Okay. I worry Truth Social is not much better than Getter, except they have 45. True. Bob, do you short the small caps individually? No, I never short small caps individually. The reason is that you can get a buyout and you get your face ripped off. And I never short uh, biotech names because again, if you could really get your face ripped off there if you get a FDA clearance or what have you. So I would strongly, if you're gonna short, you should be a proficient trader. A, B, never short a small cap, an individual small cap or mid cap name, even some S&P 500 names. You know, they can get bought out. If you're going to short individual names, look at Microsoft. You never hear me talking about shorting small caps or mid caps. Uh, I would prefer to short ETFs like the ARK ETF. We're up on that trade. What else? We're short of the semis using an ETF. That way, I don't have to worry about headline risk. I could just focus on the charts. Good question, though, Donnie. Dow depicts the best head and shoulders setup. Yeah, it does. Financial futures are up right now. Expected dip. Yeah, you may get a short covering Friday. You have a lot of profits on the short side. They may try to book profits on Friday. It's Monday that I'm worried about. Thanks, Franklin, for being here, pal. Have a good night. Talon, we have we have guns, baby. Bob, gold is flying. Yep. And we've been talking about this, and there have been a lot of naysayers, to be honest with you, but we stuck with it, and it paid off handsomely. And we're just at the beginning. We're just at the beginning. BTC short term bottom around 39.90. I'm at 29,000. Rick, I'm at like 29,000. I was at 30,000. I'm at 29,000. I got interviewed by TrendSpider, and these really young hipster dudes, really nice guys. Don't get me wrong. They're long of Bitcoin, and they took issue with me saying I'm short-term bearish on Bitcoin, and I think it's proving out. What's Bitcoin doing now? Okay, it's up. It's up at session off the session lows. I think we break down lower here on Bitcoin. If that anonymity is gone, then what good is it? Government could just seize it. Boy Nugget and AEM are hot. Yep. Bitcoin version. Okay, we did that one. You're welcome, Rick. Anytime. Guys, I wish I could take more symbols. I don't have the time. I got to log off. I should have logged off already. How about shipping for the rest of 22 and market declines, big dividends? Zim, I like. I like Zim. I don't know about SBLK, but I think the shipping name should still do okay. You're going to see a flight to quality. You're going to see here. I think you're going to see money rotate into, if the US dollar breaks, money's going to rotate into international equities. So the shipping name should do well. High quality dividend paying name should do well. So that's the way to fight inflation. With that, folks, everybody have a great night. Thanks for being here. And sign up for the 14-day free trial offer. You don't want my services? Remember, TrendSpider down below, automated technical analysis, 35% discount code. Have a great night, a profitable trading day tomorrow, and an awesome weekend. Be well.